Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, Dan back here for the weekend. James is going to continue giving coverage Monday through Thursday, and I'll be here on the weekends. And I think it's a good perspective from both of us as we don't run our analysis by each other and we don't even watch each other's analysis to make sure we stay independent and unbiased. And I appreciate the feedback you guys are giving him. Keep giving him any feedback as he does appreciate it as well. So looking at natural gas, we've got a nice bounce playing out where we had our gap up open, the gap filled, and we got nice continuation, ending the week on a pretty strong note. And this candlestick here is not updating the price action at the end of the day. Not sure why the candlestick closed here, but it was a stronger close with a less of an upper wick, and the bulls are in full control as we head into next week. So looking at the shorter term time frame, we had a clear bull break on the hourly time frame, and then we continued to form higher lows and higher highs. And admittedly, I would have probably gotten shaken out as a bull today. After such a strong move to the upside heading into the weekend, we had a big bearish reversal inverted hammer, and that was followed by confirmation and follow through to the downside. So we saw a little bit of consolidation. We bounced off of 298. Then that candlestick happened, and then we broke 298. So that was a big bearish reversal candlestick and then a lower low. I probably would have been shaken out there, to be honest. And that is because I would have wanted to lock in that profit, not had to worry about anything over the weekend, and take Monday with a nice, fresh, clean slate starting over. In the end, the bulls ended up recovering here and closing very strong right up at the high of the week. And here we are at 3042. So if we zoom back to the daily time frame and look at the next resistance levels, I'm looking at the high here on February 16th, 3062, and then the day before it, 309. Those are the next two resistances we're watching. Lack of an upper wick here as we close strong. And the weekly candlestick, we have a very strong close as well. A big time bullish reversal confirmation, nice spike in volume, gap filled, and the bulls are looking back towards the upside. So the bullish reversal has been confirmed. Last time we had a dump on the weekly, we saw a very significant bounce for over a month. I would not anticipate those kind of gains to be had. We do have a downtrend resistance line that we have to be watching, potentially going to test that level this coming week. If we can get over that level, we will look for some further upside. There are some gaps on the way back up. I'm looking at a gap right here at 309, and that gap did fill. So there is not a gap there, but the bulls are in full control, and we're looking for continuation. So UNG on the daily time frame, getting above this middle Bollinger Band on the daily was a start, and we're seeing follow through to the upside now. Close up at the high after 737. We're looking at 746 and 750. So nice follow through for the bulls, establishing higher lows and higher highs on the way up, and a bullish reversal confirmation candlestick on the weekly time frame. So there's not a whole lot to be going into in terms of details. The bulls are going to be cautious about looking for bearish reversal candlesticks on the daily time frame to indicate that the top of the move is in for now. We need to be aware that overall, obviously, we are coming off a very significant dump to the downside. The bears have control of the trend on the daily time frame at this point. So on this oversold bounce, we're going to be looking to set a lower high. So we do need to be cautious. We're not going to be looking to make a hero trade here and see another 10% move to the upside. I do think it would be wise to lock in gains sometime once we get some bearish reversal candlesticks. If you wanted to give a lot of wiggle room, you would be looking for a bearish reversal candlestick and confirmation of that. Or you could be using this 10-day moving average support. We've been using that as our guide. The bulls got over it, back tested and held it, and then saw a strong continuation. And early next week, this level is going to be approaching the upper 280s. So that could be a level that you utilize as well. Closing below the 10-day moving average would be your exit point. Whatever it may be, just have an exit plan in place because we are fighting the trend on the daily time frame. But congrats to the bulls. This oversold bounce played out nicely. Really nice follow through to the upside. and we'll be watching to see when the bulls run out of steam. I appreciate you watching and hope you have a great rest of your weekend. We'll see you soon.